Welcome everybody to our presentation on what this new hardening cyber market means for you. My name is Ellie Feldman. I'm the managing director of Wingman Insurance, if you don't already know me, and I'm joined today by two of the all-star team at Wingman. Brad Schrum, our head of underwriting and sales. He is a cyber sales extraordinaire, and our captain of the underwriting ship, Heather Glover. So thanks guys for jumping on and having a nice dialogue with all of our Wingman Cyber family.
Thanks for having me.
Yes, thank you.
So today we're going to talk about a couple of interesting things. We're going to talk about how some of these trends in cyber are causing this hardening market, what expectations you guys as users of Wingman and really the cyber market in general should expect, and what that means for you and your insureds going forward, how you can best prepare to serve them. So I really want to start off today with why is the cyber market tightening so quickly? Brad, can we talk a little bit about what we're seeing in the cyber marketplace in general and businesses in general that are causing this?
Well, there's a lot of trends that are going on, Ellie. First, the cyber market is still a very young market. And, when actuarial started to develop rates a few years ago, I don't think they contemplated a lot of things that were going to happen. And as such, rates are no longer adequate in the marketplace. So, some of the trends that we've seen, and unfortunately, none of the trends are positive. They're all going in the wrong direction. And I know you're going to talk a little bit more about ransomware, and that's really what's driving a lot of this is ransomware, but also social engineering claims and really hackers that are starting to double dip in the ransomware arena, and then also holding hostage customer information.
Well, 2020 was a bonkers year really across the board, but specifically in cyber, how have attitudes toward cyber risks changed in the last year?
Oh, it's changed a lot. I mean, just to give you some statistics from our perspective, Ellie, as you know, when we started about 5 years ago, we were writing 10% of the business. Now we're up to about 40% and climbing. So the attitudes have changed a lot. And I know you have on your screen here the top 5 risks to businesses. And I think this is very compelling and very important to everybody. And you can go back to 2011, where I don't even think anybody could spell cyber. And then you come up to 2016, and all of a sudden cyber started becoming an issue. And here we are in 2021, and that's all that's all that's on everybody's tongue is cyber and cyber and cyber and cyber. And you hear it on the news, you hear it from people, you just hear it everywhere now. So the attitudes have totally changed, Ellie, from what we're seeing from just a few years ago. I would say even as 2 years ago, they've changed a lot.
I would agree. And I guess this next slide makes a lot of sense because we're not just talking about any one industry, we're talking about across the board. Are you seeing any trends industry wise, or is it just across the board that we're seeing increases in cyber attacks?
Well, we have a lot of our insurance agents on the phone today. We've seen a lot in the insurance business with our agencies. We've seen schools. We've seen retailers. I mean, I would tell you it's across the board. I mean, if anyone thinks that they're not susceptible to a cyber action, I think they're fooling themselves, because I don't think that the hackers really care, because they don't. But this shows you that there's some industries that are more susceptible to others, but would say every one of them.
And I think this is interesting, and correct me if I'm wrong here, but in the news, we tend to really hear about the healthcare and the government specific cyber breaches. They feel outnumbered relative to other industries, but in actuality, that's not true. Those are just the ones that we hear about.
Yeah.
They're, in manufacturing and retail and professional services, we're seeing just as many more even attacks, but they're just not talked about.
Correct. And now, recently, I'm sure everybody's heard about the Microsoft about the SolarWinds, and then the Microsoft a breach as well, which is potentially could be very huge into the future. Those those bombs are just sitting in computers waiting to explode. So, if you haven't heard about winds, you could read about it. And they say the Microsoft breach is even bigger than the SolarWinds was. So,
Absolutely. We're going to talk about that Microsoft breach in a
yeah.
little bit.
Okay, thanks, Ellie.
Let's now talk to everybody a little bit about ransomware and why we call it the tip of the iceberg.
Well, it is the tip of the iceberg, and Heather, if you want to add in, please do. But the ransomware is the number one frequency and severity of loss by far. There's nothing even close to it. And you could see here by the cost, just the direct cost is 154,000. And going back to last quarter, it was actually 223,000. It's only come down because people decided that they weren't going to pay the ransomware. So that's the only reason why this number is down. But when you add in the indirect costs, the cyber claims go from all the way from 600 to 800,000 per incident. We can speak for our book of business. That's what we've seen as well. I mean, you could talk $600-800 policies that are having $300,000, $400,000, $500,000 in ransomware claims. And Ellie, just to add, when you have the direct ransom payment of 154,000 as an average, when you look to the right side and see the other costs, when you're looking at forensics at $500 an hour, that's where you really get hit pretty hard right now. Is these folks are in such demand and they are getting top dollar, and that's where a lot of the costs are adding in. And the last bullet point, Ellie, that you have number at the bottom is 21 days on average people are down and out of business, and that's to me another very critical number.
Yeah, these claims costs are going up, 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 and their frequency is going up, up, up. It's a dangerous combination in the insurance world.
Mm-hmm.
So just to sort of recap here, we're still seeing so many businesses that are having these cyber breaches, and that the costs of these breaches are going up because of the number of coverages that they're hitting on a cyber policy. Do you see this trend continuing through 2021? Does it look like it's starting to ebb, or is it still continuing to go up?
It's still going up, and that's what we're seeing. And I think Heather would agree with me that and we see thousands of submissions, and where 2 years ago we weren't seeing anybody or hardly anybody having incidents, they become quite frequent, haven't they, Heather?
Absolutely, yes.
So the frequency that we're seeing, either the insureds having coverage or not having coverage, we have just been seeing a plethora of activity of incidents that we were not seeing in prior years, Ellie. So we would tell you it is continuing to go up, and that's a big concern. And in fact, there was a recent report by Finch, and we can share this with everybody, that the loss ratio in 2019 was around 43% as an industry for cyber. And in the next year, in 2020, it was 73%.
Ooh.
That has shaken the industry tremendously moving forward. So when you have a 20-some point increase in 1 year and the trends don't look too positive, it's sending a lot of signals out there, which we can get into about what carriers are doing.
So I think, Brad, you've done an excellent job of explaining to everybody why they should expect to see changes in the cyber marketplace. Now I'd like to talk to Heather a little bit specifically about what those changes are for Wingman and how it's going to impact our agents. So tell us a little bit, Heather, what are you seeing from our carrier partners on the underwriting side?
So to further Brad's point, we're definitely seeing more submissions with claims and things, and just in general, requirement for more information. So from the carriers, they're certainly asking for more information. There's some new requirements that we're seeing. So just a lot of things coming down the pipeline that will be helpful to be prepared for.
Now, Heather in our office has spearheaded a campaign to fix what we're calling broken application process. We are going to be rolling out a new simplified single document application for everybody for the complicated risks, those that have had claims, et cetera. So be on the lookout for that. And if you have any questions on that in particular, we can talk about that, and Heather can certainly help you as you start to see that new application in about 2 weeks. Now, Heather, what are you seeing from underwriting requirements? Are you getting a lot more no's than you used to, or are they just asking that companies have stricter security than maybe they were before?
I mean, it's a little bit of both. I would say it's a real mix. So there are some new requirements that they are looking for, and if we request that information and the insured doesn't have it in place, we are getting no's on those. We are working to try and communicate that information so that hopefully agents can work with their insureds, get some of those things implemented so that we can turn that around into, something that we can quote. But it's a mix.
Fantastic. Guys, if you have any questions throughout the presentation, there's a chat area. There's also a Q&A area. Hit up either one. We'll try to answer them if they're timely in the moment, or we'll have a little Q&A at the end. So throw all of your questions in. They can be as general or specific as you like. Okay, what are we seeing on the premium side, Heather?
So right now we are looking at the information that Ellie has up here, 15% increase on our renewals and a 30% increase on new business with some additional coverages listed here. I think some of the biggest things is just being able to plan ahead, give us a little lead time on applications, communicating this increase to your insured so that they know it's coming. We're hearing this and seeing this from other carriers as well, pretty much across the board, that rate increases are here, they're coming. So best to be prepared.
Fantastic. Now I'm looking at some of these coverages. If anybody isn't familiar, Brad, tell everybody what bricking is.
Bricking is very simple. Basically, it's when a hacker who wants to be malicious decides that they're gonna shut down your computer, shut down your phone or your iPad, and you can never turn it on again. So it becomes a brick that you can throw out the window, and that's how we look at it. It's basically just somebody being very mean and shutting you down, and you can never turn that computer on ever again. So we are
now, we currently have that at 250,000, but the claim numbers are going up, so we're moving it to full limit. That makes a lot of sense to me. So what about some of these others, like the improvements to the business interruption coverage in particular seem like big enhancements?
Yeah, I mean, the business income with voluntary shutdown, basically where the insured voluntarily shuts down their system so they don't have any additional damage to their computers. So sometimes if you take the CNA, for instance, CNA decided to take their email offline right away. So it was a voluntary shutdown. So they couldn't get further into their computers or their systems. So we believe that is a very good enhancement. And then the proof of loss. So if an insured has a business income loss, usually they have to prove the amount of loss to send to the insurance company. So this is going to give you up to $50,000 to work with your accountant. Likely it's a forensic accountant, and they'll pay for that.
Bobby wants to know an example of a cryptojacking claim. Now, we are offering this as a new coverage for us, but can you explain a little bit about cryptojacking?
Yeah, cryptojacking, I mean, we've seen other carriers have it. I haven't seen it. I've never seen a claim on it, but basically cryptojacking is when a hacker decides that they're going to mine off of your computer to mine Bitcoin, where they take, and start mining on Bitcoin on your computer and just taking away the power from you, or should I say, memory and all that. We just really haven't seen much, but we wanted to offer it, or Access did, to make sure that we were similar to other carriers.
And covering everybody's bases. The question I get often when talking about cryptojacking is, how do you even know that it's happening? And the answer is sort of twofold. Your system will get super, super slow. and you won't have any idea why, but also your utility bill might go up dramatically because when you're using your computer, even when you're not, someone is using the RAM on your computer to do other activities. It's a little bit scary when you think about it, but this would cover any losses that might ensue. So
Yeah, we also have the mitigation. Heather, do you, can you explain that one?
We're seeing this very similar to other coverages, just to give Heather the prompt here.
Oh, okay, I'm sorry.
We're seeing that as a betterment coverage, similar to a betterment
Right.
coverage. If you're looking at anybody, someone who or a business, for comparison purposes, it's like a betterment coverage. Now we have another question that just came in about, and Heather, this one really is for you. What are you seeing from a limits perspective? Are underwriters as willing to put up higher limits on accounts of any size?
Yes, thank you, Ellie. We are not seeing that with our carriers right now, but I've definitely been hearing that from the marketplace. Some examples we're seeing are they're sublimiting on the cyber extortion, co-insurance, things like that, and also some higher retentions to sort of offset that potential area. So maybe a higher retention on certain coverages, things like that, but not currently with the carriers that we are working with, but we are hearing that in the marketplace.
Ellie,
Okay.
we also have a question that, have we seen a shift in limits underwriters are willing to offer on extortion? I would tell you, yes, we have seen people offering sublimits on extortion. We are now seeing carriers adding solar wind exclusions. We haven't seen any of them not offer extortion, correct, Heather?
That's correct. I haven't seen that yet.
Yep, and neither have I, but
the co-insurance, a lot of carriers are moving to a very high co-insurance for
right.
ransomware / extortion. And we're very happy to say that we are not. So we're going to still have our full limits for ransomware or extortion for any policy that we sell.
And keep in mind, just to make it clear, extortion and ransomware are two different coverages.
For us.
Extortion is the threat and ransomware is the action. Elle, we also got, okay, I'll let you take it from here. I'm sorry.
So let's talk a little bit about the new questions that we're going to be offering, that we're going to be requiring on all new and renewal business. You're seeing them on your screen. I'm not going to reiterate them, but I do want to dive into two of them and how they apply. Heather, can you talk a little bit about multi-factor authentication and what that is and how we're helping agents fulfill this requirement?
Absolutely. So multi-factor, I've been seeing this a lot myself on just things that I use personally. So for example, I went to log into my retirement account the other day just to look at it, and it is now prompting me every time I've logged into it. Has the multi-factor authentication in place. So I'm sure most of you are seeing that in different places. Basically, how I would describe it is it's you have your username and a password, but then it prompts you to add another, say, a code that you receive from a text message. So another way to just verify that it is in fact the person that it's saying it is. It's important because a hacker can certainly be monitoring your activity, finding ways to get into your email, and if they somehow keystroke your login information, they're easily able to get into several things. So it's an important thing. It puts up a extra layer of protection to keep those hackers out.
So if any of you guys were on our best cyber practices webinar a couple of months ago, the presenter was a cybersecurity expert. I encourage everybody to go to our YouTube channel and check out that video, because about 3 minutes of the video are him going onto a random website, pulling an employee of Vertifor's login credentials, and then actually using them to log into Vertifor's corporate thing. So your email and passwords have been compromised millions of times. It's just a reality of this day and age that we live in. And the only thing that prevents a bad actor from taking your username and passwords from any number of sites that you've used them on to buy airline tickets or Home Depot products or anything else online where there's been a breach, is if you have a secondary check in place to ensure that if they try to log in with them, but they don't have that code from your cell phone, they won't actually be able to get in. So multi-factor authentication is really important. It's also really easy to turn on, and we're going to be adding to our platforms an instruction manual for everybody to turn on multi-factor authentication for their email accounts specifically. So if you have any questions about that when this comes up for your insureds, use our live chat on our website. We'll be able to help you guys really navigate talking to your customers about this, and we're putting out some real materials to help you explain why it's important and what they can do to actually secure themselves. Now, backups are another requirement. We're doing the same thing for that. We're going to give everybody instructions on how to back up at a minimum, just the documents on their computers to a secondary location. But obviously you can go much deeper than that. If any of your customers have data somewhere, we're going to be providing resources for everybody to help their customers get set up with backup so that they can get insurance. So we think that these are really important, and we're hoping that we'll be able to help you navigate this process by holding your hand a little bit. We just got an interesting question about number 3. How long will it take an insured to get its systems back up and running from a cyber attack? And Joseph thinks it really will depend on the severity of attack. Joseph, you're 100% correct. If somebody has backups, however, you can cut that number in half. And so what we're saying is, if you're not a data heavy organization, if you have backups for all your critical data, if you keep your email accounts secure, then the likelihood of it taking longer than 10 days, for example, which is the number we're actually asking about, is very unlikely. All right, so what does this all mean for you guys and how this is going to work? Heather, what do you think this is really going to mean for agents? What do they need to know and do to really be ready?
I think the number one step is planning early for renewals, being involved as early as possible, knowing what is going to be required. There are certainly some new application questions and requirements, as we've discussed. Just knowing that the increases in premiums are coming and being able to communicate that to the insureds, things like that, I think are really going to be the key in getting prepared for this.
And we're seeing a sort of lag time in getting applications completed. Other than we're obviously going to be sending them out when needed, but the applications are always going to live in the tools section of our radar if you ever need them. And we can, if anybody needs them or wants to have them ahead of time, shoot us an email at info@wingmanins.com. We'll make sure you have all of the applications, the main application in particular, to get it out to anybody that is coming up that is going to need it. That's going to be large accounts, higher limit accounts, accounts with large claims, etc. Brad, what else are we seeing in these changes? How do you think it'll impact agents on your side?
From a sales perspective, we're going to still be very, very competitive, Ellie. I mean, our rates and our growth and the activity, you should still be very, very competitive. We'll also help you in comparisons. We have new comparison worksheets that'll be put up on the site, but we have those. We're doing a lot of comparisons to forms and premiums, and we still feel very confident that we're going to be competitive in the marketplace. That's not really a big concern for us at this point, because other carriers are either increasing rates 40 to 60%, changing forms, changing everything. So we really think our changes are minimal compared to everybody else's.
And to answer someone's question from earlier, and also just to hammer home the point, we're also not 100% relying on Access from this point forward. We have brought in, and many of you guys have seen that we're using some other carriers as well to fill the holes and get everybody's clients the best coverage for the best price that we can. That being said, I feel like we all agree, and Heather and Brad, I hope you agree with me too. We've been hearing from you guys and everybody else that we've been underpriced for a good 18 months, and we just think we're getting up to where the market is, but we're still going to certainly be cheaper than the Chubbs and Travelers and all the non-admitted markets out there. Yeah.
Yes, would agree. We haven't really seen a slowdown at all. and would not expect it. And the MFA, quite frankly, is just a minimum requirement. It is really just putting a lock on your door versus someone be able to just open your door and get through. You have to do at least some minimum, and all the carriers are asking for MFA today. If they're not, there's something really wrong. So I feel very comfortable. I actually think our questions are probably minimal compared to others of what we're seeing in the marketplace.
And are we going to be penalizing anybody if things change during the policy period? For example, would there ever be a time where we wouldn't cover a claim?
Not that I'm aware of. It's subject to terms, conditions, and exclusions in a policy. But no, I mean, there are no, if you look at the current access policy and the new policy, there are no preconditions in that policy.
Because we are seeing a little bit of that come in from other carriers.
Oh, yeah.
As well, ones that we don't currently work with that are saying, we need you to implement the following 5 things after we set coverage, or else you won't get covered for any claims. And I don't really think, particularly for the small to medium sized businesses that most of our clients deal with, that's necessarily feasible.
Yeah, I mean, there's one form that we just reviewed yesterday that said is if you change your security or don't have the security based on the application, there is no coverage. It's an exclusion in the policy that basically there's none. So.
All right. So where are we going to go from here? Well, what's everybody's final thoughts? Heather, I'll start with you. What is there anything that we've missed that you want to make sure that everybody knows about going forward that, will help them navigate these changes?
I think we've really covered all the high points, just being prepared, knowing what's coming, familiarizing yourself maybe with some of those questions on the application, the MFA, and we're working on those resources, as Ellie mentioned. So once they're up and running, getting familiar with those as well, and just knowing what's coming.
Don't hesitate to reach out.
Yes, and that was my next thing. Please email us, use the chat. If there's anything we can help with, we will answer you the best we can and help as much as possible.
Okay, so to answer somebody's question, Brad, sorry, what are your final thoughts?
No. I mean, your slide before is just, there's so many opportunities out there. The opportunity to help your insured improve their risk management from a cyber perspective is out there, and it's just still in a very long runway. Maybe we're in the 3rd inning of this cyber, when this cyber opportunity or environment to grow. So that's kind of where we are. I see a lot of new questions come in here. Ellie, I don't know if you've had a chance to see those, but I'll
absolutely. Let's take a couple of them in just a second.
Yep.
I want to get the biggest one out of the way. When should you expect these changes? Stay tuned. We're in the final phases of testing for all of these new rates and forms and questions, etc. But our target date is in 2 weeks. You're going to start seeing this. So what does this mean for you guys? Anything that's already been quoted, you can keep that quote good for 30 days. So any price that we quote from now until 2 weeks from now on any new business, 30 days, all renewals are good until their renewal date. So this really won't come into effect substantively for renewals for about 90 days. But you should expect it on renewals as well. At least the 15% rate increase we're already seeing on a lot of renewals. But even the automatic renewals, you'll see those rate increases in about 90 days. So that's when you should expect to see all of this. But we encourage you guys to, when you log into the system, we'll start a countdown clock next week on when to expect all of this stuff and some additional resources for everybody. So stay tuned for that. You guys are the earliest to hear about all of this. This is all new for us too. We're pretty excited about it because it's making our policy better. It's making our pricing more competitive with everybody else because we've been just quite a bit cheap. And it's going to help you sell this because we've got such an excellent product. All right, let's get to some of these questions. Can we email the slides to participants? Absolutely. We will email this to everybody. We'll also email blast out to everybody the link to the video so that you can share it with your colleagues. And we'll also obviously be email blasting everybody fairly regularly for the next couple of weeks about these changes. Is crypto jacking being added on renewals? Brad?
Crypto jacking will be added on renewals if you go with our 4.0 coverage. 3.0, it will not be added. So if you decide to take the 15% increase, it will not. If you take the 4.0 with the new form, it will.
Fantastic.
Yep.
Okay, so we had a really great question from Trish. It's getting harder and harder to place tech E&O in particular for data hosting and SEO style operations. Where would we go with that? We're working on that, Trish. We're trying to get some better markets. If you think the cyber market is hardening quick, you ain't seen nothing with the tech E&O market. They're absolutely getting hammered. Most carriers don't want to offer the cyber coverages for tech companies anymore because their loss ratios are out of control, but we're working on it. Heather, I don't know if you have any insights on that, if any ideas on where to place some of this harder to risk business, or if we're still just sort of working on it.
I would say we're still working on it. We are we are seeing an increase in applications for some tougher classes, which to me is an indication that other markets are tightening down as well. I think there's a reduced capacity for, you know, certain types of business. I don't really have any specific answers on where you might go for that. I think it's a tightening in the marketplace as a whole, to be honest.
Are you seeing carriers seeing our carriers in particular requiring contracts for any B2B services that have data as a component? I'm not sure if I'm explaining this very well. Do you know what I mean? Like, I know we ask in the full application if you're third-party vendors, if you have a liability shield, et cetera, with your third-party vendors. Are you seeing underwriters asking about that for smaller accounts?
I'm not sure I totally understand the question, to be honest. I would say I know we do ask those questions. I don't think it's a deal breaker if they don't, but you know, every account's a little different, so it might be a case by case thing. But I haven't personally seen that be an issue that strikes me as something I could comment further on.
That makes total sense to me. It has not become a big issue for us just yet. All right, I've got a big one, Brad, for you. There's a lot of craziness in the cyber marketplace, a total lack of standard language. What is your best advice for making sure that selling a particular cyber policy does not impact somebody's E&O as an insurance agent, to make sure that they're offering the best coverage they can?
Wow. Well, what we do offer, Ellie, is our comparison worksheet. I mean, I can't say it's good for everybody, but we've seen from a lot of our agents and brokers asking for that, and for us to give, you know, help them do an analysis. So, you know, doing the best we can to make sure that nothing's missing. We can't guarantee it, but we do the best we can with what we have. And
what about versus a BOP add-on or a package add-on cyber? Go on your tirade about that nonsense.
Right. That's pretty easy. You know, first of all, it usually just covers third party, and most claims are first party, meaning that they affect you, not your customers. So BOP policies, that's usually what they provide. The limits tend to be very low. We showed you the average ransomware claim, you know, just direct is 154,000. And indirect could be 800,000, and usually they offer 250,000. Either they give it to you for free or they charge you an arm and a leg. There's no in between. And there tends to be a lot of exclusions in those policies from what we've seen. So I would tell you that the market, if you could look at that market compared to the monoline market, you're going to get a much stronger policy in the monoline market. And I would suggest that's where the majority of clients need to go to begin with. And
I would
then,
also
yes,
say there's some quality admitted markets now, Brad, wouldn't you say? And so the need to go non-admitted for cyber is pretty much null. All of the coverages, for the most part, save like some weird outlier coverages, are available at a much more affordable price in the admitted market. Wouldn't you agree?
Yeah, mostly. There are some non-admitted markets, and the ones we see, there's the difference between admitted and non-admitted, and you can get into those details. And I would, the non-admitted market can change on a dime where admitted can. Pricing can change on a dime for non-admitted, where admitted, you do have to follow the rules and laws of that state. Um, there's some interesting things. So I would feel more comfortable with an admitted market, Ellie. There's some that are a little less competitive from a coverage perspective than others, as I mentioned earlier. Because someone
Great.
had asked, who are our main competitors? Who do we run up against? Who's out there?
It's a wide variety. And I think that'll get us to another question, which is, how do we get your comparison worksheets? Just email us at info@wingmanins.com with whomever else you're selling, and we can send you the comparison worksheets that if we have them already, or we can take a look at the policy with you to come up with anything for any markets that we don't normally run across. So just let us know who you're currently, if you're selling anybody else, and we can help you with that from a comparison standpoint. Just send us an email. And the final question we have is, are we going to have recommendations or leads that we can share with clients to help them be in compliance for these new guidelines? Heather.
Yes, we are working on that as part of the process. There will be a resource area for that. And when you're in the application, there will be some additional resources. If you answer the questions without an affirmative response, there will be, explanations and documents that you can download and use to help with that. And a separate resource area coming for the clients as well. And then on the application, Ellie that mentioned that new application we're working on, and there's going to be some scroll over areas on that coming where it will explain what each different thing means. So we're trying to come up with different ways to help explain those things and offer resources for it.
I would say the most common question Heather gets on a daily basis is, she said, is an insured telling their agent that they don't need MFA, or they don't have MFA and they don't need it. And of course, our resounding answer to that is, that's ridiculous. Of course you need it. Here's the answer, and and we are going to be talking about this a lot, guys. So if you have any questions on this, we can spend whole meetings with your individual teams on how to talk about MFA in particular. But the answer is your email. At a minimum, every business has Microsoft 365. And for that, you need to turn on the MFA at a minimum for your Microsoft 365. You guys are all insurance agents, which means you're working with third-party data providers, your Vertifores, your Applieds, your et cetera, that are actually keeping your data for you. You need to make sure that you have MFA turned on for those as well. So anywhere you keep your data and anywhere you keep your email, at a minimum, is where you need to have MFA turned on. And you just need to ask, or we'll have our guides for Microsoft 365, et cetera. We can do it for Gmail if a client uses Gmail and not Microsoft, or if they use both, we can do that for both. So we'll be there to hold your hands and help you out in any ways that we can to navigate these changes. But don't take no from an answer from your insured, because it means they're not going to be able to get insurance.
And I can't even say they're going to be able to get it from anyone as they move forward, and certainly we can send you the articles. Just want to compliment, when you do see our new platform, it's got this knowledge wizard that I think all of you are really going to like, and going to be able to help you talk to your clients about these requirements. And we really don't think that these are anything outrageous. Under $50 million accounts are really not.
Fantastic. Well, that's all the time that we have for today, but don't worry, this isn't the last time we're going to be talking about these things. Again, if you have any questions or you want to talk to any of us individually or set up meetings for your team members, please just let us know. Reach out to your contact at Wingman, or just at info@wingmanins.com. And we are more than happy to help. Thank you, Brad, for joining us. Your insights, as always, are fantastic. Thank you, Heather, for being the backbone of Wingman and making sure that all of this runs so incredibly smoothly. If anybody else needs anything, you know where to find us.
Thank you, Ellie.
Thank you, Ellie.
Thank you.
Thanks for joining us.